Hey guys, all content discussed is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. So, one of the key economic data we saw balloon up after the Fed decided to print infinite amounts of money after the pandemic hit was housing prices skyrocketing. We saw the value of housing suddenly exploded, with valuations doubling and even tripling in a matter of a year depending on the location. I can personally attest that housing valuations in Tampa rose significantly, with some homes gaining over 20% in a month. This was driven by a variety of factors, but key among them was institutional investors quickly buying and paying whatever price owners asked. Though this was one of the main influencing forces in pumping up home valuations, there were other unknown factors that had its hand in this, and the one I want to talk about today is the work-from-home policies. After the pandemic began, remote work drove over 60% of the housing price surge, at least according to the latest data shared by a Fed study. The transition to remote work has been a key driver in the surges, and it will likely drive up costs and inflation even further as we go forward and the changes become permanent. The fundamentals of housing demand have changed, such that the persistence of remote work is likely to affect the future path of real estate prices and inflation. This is key to know, because now a new ill is beginning to spread across the states. Home sale cancellations are spiking tremendously, and so far it appears that this is only going to grow from here on out. Home sales have been falling through as homebuyers are retreating from the housing market. In the month of June, we saw builders say that there was an inflection in the housing market, and that when July and August passed, the metrics got even worse. What is driving this is the Fed hiking interest rates up another 75 basis points. Though we are in a recession, most of the population still believes that we aren't in one, and there is serious fear about one, which is making potential homebuyers hesitant to purchase new homes as they believe they are both overpaying and getting screwed with the interest rates. New listings of homes decreased to 15%, marking the biggest decline since the start of the pandemic. This is pushing down the supply of homes down. According to the NAHB, almost 1 in 4 home builders have been reported as reducing their price this month, which was up from 19% in August. Mortgage rates are trending higher and there is a lot of pressure coming from the Fed, with anticipation of even more so in coming months and the next year. Not only are home prices being reduced by home builders, but rents have dropped for the first time in nearly 2 years. After a 20-month run of positive monthly growth dating back to 2020, the market is witnessing negative asking rent growth. There is a complete reversal of market conditions, shifting from demand outstripping supply to now new deliveries outpacing lackluster demand completely. Still, something of important note is that though the prices of housing have fallen greatly from their peaks, they are nowhere near affordable for lower-income families. Even middle-income families would have some difficulty attaining them in these circumstances. This is because the run-up to their peak was so massive, whereas now it's just beginning to cool off, which actually takes us into our next segment, which is where we go from here. There are fears of recession because for some reason people are not putting 2 and 2 together that we are already experiencing one. In fact, we have been in one since 2020, we just didn't know it because the Fed made sure to put a lot of cash in everyone's pockets. But perception of events and circumstances is key in predicting future behavior of the various economic systems which engulf us, and right now there is a significant fear that the admission of a formal recession could send home prices falling over 20%, or that is, 20% more than they already have. Some analysts are estimating a potential fall that could have housing fall 20% by mid-2023. Prices have much room for further falling, but it is unlikely that it will be like anything we experienced back in 2008. Remember, the housing crash of 2008 was very different from what is happening right now. It was due to a set of circumstances that are not present in the modern day. For once, there is a lot of supply now, but there is a lot of demand, and a lot of the policies have changed since then so that we don't even get a reoccurrence in the manner we experienced. The housing market continues to fall, and as I have said and will continue to say, I think this is the last bastion where big money remains relatively safe. As it falls, depending the pace and veracity of the fall, we could potentially offset a recession so hard it makes 2008 look insignificant, or we could simply continue falling at a pace. Remember that the government wants and aims for a slow and careful fall so that they can control things and keep the narrative going that things are okay. The moment they lose control, nobody listens to them. It's their job to ensure that you think the circumstances are not the best but definitely not the worst, even if they continue to worsen over time. I have seen many people argue, even in my recent videos of last week, that I was being extremely bearish and hyperbolic, But you tell me, do you think it's me that made world currencies fall? Crypto losing more than half its value. Housing markets lose money as people panic out of purchases. Stock markets continue to hemorrhage value non-stop. Do you think it's me being hyperbolic when China is giving global statements at international assemblies citing they will take any means necessary, implying war, to get what they think is theirs, or that Russia is having serious talks with Western allies regarding the outcome of a potential nuclear conflict? Is it me being hyperbolic if I say the destabilization of the East's greatest economy, China, is going to send them into changes that are impossible to anticipate and that the world is not ready for? Or could I be somewhat right in telling you that because the entire world is unsettled, the ramifications of this require fundamental changes in valuation of all assets and securities in the world? You don't even have to listen to my old videos telling you about what would happen. Just turn on CNN 19 hours ago as of me writing this video. The British pound, one of the world's most credited, trusted and respected currencies in the world, crashed. It didn't dip, it literally crashed to a record low against the US dollar. This plunge in value happened as fears of instability in the UK government finances is not saturating the minds of all investors and market participants in the UK and the rest of the world. Granted, it bounced up a bit, recovering slightly as European traders came in, but this relief is only temporary. The British pound will continue its bearish direction with slight bounces on the way. Questions are being asked, and serious ones at that, about the economic competency of the new government in the UK and whether they have the resolve, experience and knowledge on how to ensure the country maneuvers this global recession as it is. This uncertainty, which again is what drives volatility up, as I have said many times, is what is causing these erratic valuations to get out of hand. However, though the UK pound had its reckoning today, it wasn't the only currency that tumbled. In fact, because the UK pound fell and grabbed all the worldwide media attention, nobody looked at China's currency, but I did, and as you are about to see, all these currencies are sitting on a watered paper castle. China's yuan slid nearly half a percentage point on the onshore market, marking its lowest level it has been in more than 28 months, with the offshore yuan falling 0.4%. These declines prompted the People's Bank of China to impose a risk reserve requirement of 20% on banks' foreign exchange forward sales to client. Japan's yen dropped 0.6% against the dollar to 144 as well. South Korea's declined as well. I have been talking over and over about China, and there is a reason for that. As much as the West likes to stare in the mirror in its own narcissistic infatuation with itself and its achievements in technology prowess, things are still made in China. Japan is still king, and South Korea is crucial to the rest of the world. Look how easily all the currencies of the world's most important economies plummeted. Look how fast it happened, with governments having to rush in and make regulations and last-minute acts to save them in order to preserve the status quo. Guys, it's not me being hyperbolic when I tell you that we are living in a world where everything, from currency to stocks and crypto and housing, is all held up on a watered paper castle. Don't look surprised when all you have amounts to nothing if things get ugly enough. Lastly, let's talk about AMC, because the news came in today, and though we knew about them, I still don't like them, to be honest. I am not going to hide behind a wall out of fear of being called slurs. I continue to believe in MOIS because data shows nothing has changed since January of 2021, but the recent changes are very unsettling to me personally. In a filing to the SEC, AMC said they have a deal with Citigroup Global to act as sale agent related to the APE preferred equity shares. As part of the sales prospectus, AMC said Citigroup Global may offer and sell up to 425 million APE units. This move, otherwise and more commonly known as dilution, is very controversial and has sparked debates on Twitter and Reddit. People not liking it are called ignorant, shills and paper hands, while people that like it are called ignorant, bad investors and arrogant. I will offer a different take on this. I want to state that as a MOIS investor, you are not forced into liking or having to agree with everything a company does. You guys know that I am huge on GME and that by comparison, my AMC shares are nothing. That didn't mean that on many occasions, I haven't liked how GameStop has managed its business or agreed with the decisions they made. You are not forced to like or agree with everything, and not doing so doesn't mean you are uneducated or a shill. I like AMC a lot, it's why millions of people hold and continue to accumulate shares. I do think the way AMC is going about bringing in money to its business through APE units is wrong. I would prefer it drove in money through business means, by making better contracts with movie studios, by upping its streaming service to be more competitive, through acquisition of potential studios where it can begin producing its own films. These are by far more enticing, interesting alternatives than by going around shareholder approval, which they wouldn't get, in order to force dilution to pay off its debt. Even through this big selling of ape shares, AMC will not even pay off its debt, not even close, so to me it's like, unless Adam Aron has this huge plan to put this money to work to turn business around, the approach he is using is very questionable. Granted, you could hypothesize that he is doing this to screw shorts or whatnot, but those are far-fetched assumptions, especially considering he has gone public on Twitter to say he doesn't believe in the short thesis and there being more shares available than the float. Many will argue that's because it would be unlawful to say so without evidence he doesn't have access to, but he also didn't have to say that. Me personally, I respect AMC, I am here for the squeeze and I am not leaving, but this action does not inspire confidence in me towards the company. I respect others who think otherwise and do not think any lesser of them, their opinions or attitudes going forward. We as a community need to be more open-minded and establish dialogue and have hard discussions rather than shaming anyone for speaking things you are not emotionally mature enough to accept as a different opinion than yours. I saw many people talking ill about YouTubers, and though I get the sentiment and I honest to God don't care about any other YouTube channel other than mine, I do want you guys to know that all I provide is factual information with my own subjective opinions, which you are more than welcome and encouraged by me to criticize and judge on your own accord. Just be respectful. We are all here wanting the same thing. We don't have all the data because markets are manipulated and information is distorted. We are all trying to figure this out, so let's all remain cool-headed. Also, this storm heading to Tampa is now being projected to becoming a Category 4 hurricane, which will most likely damage important infrastructure like water and even electricity. If I disappear, don't think it's because Kenny sent a hit team to my house. This is a serious hurricane that will leave a lot of devastation, and unfortunately, I cannot leave the area, so I am stuck here. I am not in the shoreline but not that far out either, which means I could fall victim to flooding. Regardless of what happens, and if I go missing for days or even weeks, don't fear for me. Know that I will never abandon this movement, the goal and mission of this channel, and especially you. I will be back and continue to keep you guys informed in everything. Stay strong. Send good vibes my way and I will see you all at the moon.